Hello everyone. Today is December 2nd, 2022. It's a Friday, and actually we're going to review a couple of things in the price action that or the Renko that gave us a good opportunity to enter in gold. So before I start, let me remind you that I'm not a financial advisor, so I'm telling you what the strategy I use, so take the trades or take my advice at your own risk. This is only for educational purposes. Now. One thing that so check the description below. There are some links. I do trade with Apex, and I have an affiliated account. So if you use the link below and you subscribe, I would receive a small kickback on your subscription. But the most important thing is that you would be able to trade at no risk. So choose the plan and then check them out. It's a really good plan, and there's an 80% discount until the 5th of this month, and so you can take advantage of that and see if this option is for you. Okay, so let's get started. I'm gonna review the 240 minutes chart for today. So you see here we do have all the chart is bullish. Actually, if we review previous days, you see that gold has been in an uptrend for some days already. So at the beginning of November, it's been with higher highs and higher lows. There's a little bit of batch here, and then moving averages are crossing to the downside, but you see this moving average here, the 200, is moving to the upside nicely, and then you have the 50. Let me see what I did. That is not what I wanted to do. So I'm gonna open this one. This is the 50 SMA, and price it's been in the last days over that level, so or over that moving average. Momentum is also to the upside, and then you see that there's a little bit of retracement here to the 21 EMA, which is this green one here. And also moved up above the 13 EMA. So overall, gold has been bullish, and with the news today, there was non-farm employment change rate today, and the market came down. Gold came down a little bit to this level and then bounced back up in a nice reversal. So there were a couple of interesting opportunities here that you could have taken advantage of. So I'm going to move this one away. I was coming into the market like neutral, but also with the expectation that a good move was going to happen. Yesterday there was a move to the upside, but then overnight the market was kind of like moving sideways in this area right here. Okay, so one strategy before news is to rely in resting orders. You don't know if the market is going to react positively or negatively to the price. So what I do is to take to put a resting order in the upper side of this level, thinking that probably it's going to break up. And as well to the downside of this level. So I put an OCO order, so in that way the other one would cancel or one cancel the other if one of them triggers. Okay, so in this case it broke to the downside, so there was some opportunity to take advantage of this move early in the morning. Market opened, the ghost pit open for gold at 820. and then there was a move, and then the market was bouncing, or was actually ranging the whole day until the afternoon, which resumed to the upside. Okay, so let's take a look at that. So here is the overnight session. Normally what I do is to look at the high and the low, or also the most touches that you see during the overnight, and then for that I do have one of the strategies I use is to take the overnight high, the overnight low, and then I use my Fibonacci retracement, which I modify a little bit, and I put that one there. Okay, so boop. So this one is actually a fib level, and you see the levels here that I create. So you have the 0 level right here, which is the downside of this range, and then the upper side of this range is the 100. Now you have 200 and 300, and I paint them so to see where they are. These are oversold levels. This one is the magnet, which is the range, initial range, and then this one is the oversold level. Okay, so that's why I have it marked in green, expecting that if it doesn't go below this level, the market is going to probably go and bounce back up. Okay, so basically what I did and what I saw here in the morning until 8:30 was this, right? And that is what I draw. Okay, now market open right here at 8:25, expecting the move at 8:30, and sure enough, what happened is that it broke in this area right here, and very rapidly resumed or started to move to the downside there. Okay, so you have one target off, and then the second target. This happened really fast, so it's very, very unlikely that if you don't put the order before 8:30, then you probably have missed that trade. So that's why I put a resting order to trigger at and I don't put I was going to say at a limit order. I don't put a market order, because sometimes these moves are very, very fast, and then I just want, if I miss it, I miss it. Sometimes this one gaps down. So well, the market started to, so here is the first trade, and then the market did very rapidly a move there, and it started to range in here. So very dangerous area to trade here, because look at that. This is actually crazy, and this happens in the first 10 minutes. So what in the first 5 minutes. So what I do is to wait after the first move to wait and see what's going on. Market was trying to resume to the downside, but then we were in the oversold level. Very, very likely that this market was going to move to the upside or started to range after this move already. If you see the 30 minutes, started to go down, and we are rapidly in the green level right here. Let me point it out with this paint tool. So here you see that went to this level, and then captured the green area and started to range in here. You see a lot of during the day there was still we are bearish in the short term and 30 minutes, but there was some weeks there. So entering down here in this area too close to this moving average is also a risk. In the 50, which is this green light here, operates and acts as a magnet. So I was expecting that either went to this area here, and then keep collapsing, or moving to the upside and then find some resistance there. So right here, when you are in the green area, nothing to do anymore, and then probably it would have been a good idea to wait, and that is what I did. Okay, so basically you wait there, and then here you recognize, hopefully you recognize that this one is a range, a consolidation area, very long. After the first move, then this one here, it's a range for sure. I'm gonna paint this. Well, no, I'm gonna put levels instead. So you have this one double top, lots of areas here that you have that you can mark as a resistance. Now there was here an attempt to go up. This one is at 11, and then surely enough, it broke to the upside. Okay, so here you do have a horizontal breakout, or a setup for a compression break. Okay, so here you do have, let me mark, no, I don't want to use that one, sorry about that. This one here, this one is actually, you see that it is consolidation for all the reasons I gave you now, but then it broke to the upside right here very nicely. Okay, so there's an entry there. Now what happened here is, you see here it's 11, which is right there, right? So in the anchor chart, there was a break out of this level after it started to move for a long period of time in this area here. Now this is the area, that you see in there, right? Okay, so now weeks to the upside, weeks to the downside, some large breaks, but then you see that in here there's an alert. The market is actually breaking to the upside and reversing after this move, after this move right here, that right there to the upside. Okay, so okay, going back to this, so this one is a good entry, and then you would get, and you would have time to enter this trade right here, and then you are good for a move there. What did I do? Okay, I think that I did. Oh, there you go. So basically, my indicators, okay, there you go. So basically you had a move that lasts from 11:10 all the way through the afternoon, and then it stopped. So you could have taken, if you took this one, then you would have take one target and then a runner right there. So the trades today were right here, a break to the downside for one target and two targets, and then in here for one target and a runner. Basically, you could have sold this one right here in the first reversal, and then you would have been okay. It's already in the lower side of this range, overnight range area. Okay, so just wanted to share with you that entries and or setups, and I expect that gold is going to continue to move up. We'll see. The market, the daily is still bullish. Let me put the daily here. Where did it go? Okay, I think that I lost it. Okay, anyways, where is it? Did I close it? Probably I did close it. Oh, there it is. So this one is probably not telling the whole story, but it's moving now to the upside. There is some resistance here, but it's moving. It's making higher highs and higher lows. So this one is a low. Then there's a triple bottom here, a high, and then a low. Higher low and then a higher high. Now we'll see how it behaves. It seems that there is some resistance at this level R3 and then some additional resistance here, but we'll see if it keeps moving to the upside. All right, that's the video for today. Thank you so much for watching, and remember to check the description below. Thank you so much.